Hello, and welcome back to the Faces of Melrose Real Estate. My name is Jean McAndrews, and today's show is featuring Christine Rocha from RE/MAX Leading Edge, Lou Izzy from the law firm of Bell & Izzy, Chris Cower from Patriot Community Bank, and Chris Cinella from Edward Jones Investments, located here in Melrose Square. The topic for today's show is Seniors on the Move, and our vendor spotlight is Joy Camp from C&Z Transitions.
Hello and welcome. Today we're going to be talking about seniors on the move and planning and preparation for the next stage of their life. There's a lot of advice when it comes to first-time home buyers, but tonight we're actually going to talk about people who have owned their home for a number of years and what are the next stages in planning that needs to go into if they plan on selling that home. Before we get too much into the segment right now, what I'd like to do is talk just a little bit about the Melrose market. Right now we have 16 active single-family listings on the market. We have 4 active condo listings on the market, and we have 4 multifamily listings on the market. So a total of 24 active listings in the Melrose market right now, which is just incredible. It is still a seller's market. It is a wonderful time to sell your property if it's something that you're thinking or considering of doing. Low inventory, supply and demand, and just a demand for buyers. Today, we're lucky enough to have Chris Cinella with us. Chris is a financial advisor with Edward Jones. His office is located on Main Street. And Chris, welcome. Thank you for joining us.
Yeah, thank you for having me.
Absolutely. If you'd like, why don't you share a little bit about yourself
Sure.
and maybe the type of services you offer your clients?
Absolutely, yeah. Well, first I grew up in Melrose and I went to Melrose High School.
Mm-hmm.
Currently I live in Stoneham with my wife Maggie and 5-year-old son CJ. And judging by your inventory, I don't know if I'll ever be able to move back to Melrose, but one of these days.
It will be tight. It will be
That's
tight.
incredible,
I know.
isn't it?
So I own the Edward Jones Investments, and Edward Jones Investments is, basically we're a full-service brokerage firm.
Okay.
And we offer everything from IRAs to 401ks to insurance planning and also college savings planning. So, we do a full spectrum, of different types of investments and services that we provide.
Great, great. All right. Now, survey shows that 8 out of 10 Americans own a home. And of those, about 2/3 actually own their home free and clear of any mortgage debt. But what we're finding is that people are staying in their homes longer, whether they're entering retirement age or they are retired. Because of the economic slump, because of the decrease in real estate value, people are staying in their homes longer. What this does, though, is gives people an opportunity to plan and prepare for when they are ready to actually move ahead. A call I might receive could be, my wife and I, we've lived in our house for 30 plus years. We're now just thinking about putting it on the market, about selling our home. And would you come over and let us know what our home might be worth? That's a great question. It's an important question, and it's really the beginning stages of kind of transitioning to that next stage of your life. The planning doesn't just stop with real estate, though. There's financial planning, and there's estate planning as well that people need to take into account. It can be somewhat overwhelming. There is a lot to consider. But I think if you have a strong network of support, obviously first starting with your family and then turning to professionals who would be able to help you in those areas, it's a transition that can be made somewhat smoothly, especially if you have the time to really do things at your leisure, to do them at a time that's convenient for you rather than waiting to a time that you may need to do it rather than wanting to do it. So when you are at that stage, like I said, this is just a good time to really start your planning.
Sure, hence the term planning, right? Because that's really what it's all about.
Exactly.
It's being able to do it at a pace where you can actually look at your options, think about what different scenarios may pose, and then decide which track is best for you to take. Right.
Absolutely.
Okay.
Absolutely. Yeah. Thank you. Chris, what do you think from a financial planning standpoint? I know from a real estate, I like to kind of go in the beginning, and really be there, ground going forward.
Right. What I think is important is to have a plan in place, to sit down with a financial professional that has the tools and the software that can project out your retirement income needs, and how do the proceeds from the sale of your home fit into that equation. Okay, it's all too often that I see someone come in after the fact, which is okay, but they might have spent some of the money, they might have gifted some of the money, and they haven't done the planning to know whether or not that was such a good idea.
So you think it would be, for someone that's even considering selling their home in 6 months or a year, you'd say that you would like to see those people come in well in advance of actually, listing their home if possible, just to find out what their goals are, and then determine if a certain scenario plays out where they sell their home for X amount of dollars, what that net effect of that income would then do for them in terms of planning out their future.
Absolutely.
Okay.
And then you'll also plan whatever their financing needs are and what their mortgage payment might be and how that could factor into their lives now and in the future, and how much of their disposable income they can invest in things like that.
Exactly.
Yeah.
Great.
Exactly. Yeah. I mean, part of the financial planning process with my existing clients, for those that are, nearing retirement and thinking about this comes up as a part of the process. Do you think you'll sell your home in retirement? Sometimes it's no. A lot of times it's no. Sometimes it's yes. What would that look like? And so those are the different scenarios that we will run through. But I also think, kind of piggybacking off what you said in your opening about having a team in place that can, work together and from my point of view, I'll be giving a number as to how much they think it's worth, but it's helpful to speak with the real estate agent and to be able to maybe project out the value of the property.
Yes.
And you hear a lot from the economists through the National Real Estate Association, so you know a lot more about what's going on, with real estate than I do.
Absolutely.
So.
Right. Yeah. And then to get back to the planning aspect of it, from my perspective, I certainly believe and I advocate for all of my clients to have a solid estate plan in place. And for many people in the situation that we're talking about this evening, nearing retirement age or retired, moving on to the next phase, perhaps looking to right-size their home, whatever that means for them personally. It's important to have an estate plan in place, and for many of those people, they may not have anything in place, or they may have something in place that they had prepared for them 20 years ago. And as you know, times change. Their needs, their goals, their wants, their intentions change. So, I know this isn't a show about estate planning, but just to basically touch on a few of the estate planning concepts, everyone should have a last will and testament. And sometimes that document can specify exactly how you want your assets distributed, or that document can act as a pour-over vehicle, which then allows you to transition your assets into a trust. We can talk about that in a minute as well. But secondarily, a medical directive, or a lot of people refer to it as a living will. It's basically the document that states if you individually cannot express your intentions with respect to medical care because you are incapacitated, you want an individual who's close to you, who knows what your preferences are with respect to medical care, that can make those decisions for you in your place. And then also a durable power of attorney is a document that's very powerful, especially for those individuals that are getting on in years, because that document, when executed properly, would obviate the need for a guardianship or conservatorship proceeding to be undertaken in the event that you're physically or mentally incapacitated and cannot handle your own business affairs. So
But
those
it
are
seems like that the sooner people do that in their lives, when they're feeling well and able to make good decisions, knowing that they could change it later on if they wanted to, but
That's
at
right.
least start the process and have some type of, know the different options that are available to them for those type of legal issues
Exactly.
that you could help them out
Yeah.
with.
And that's important. And it's important also when you're talking about those folks that are readying for retirement, to not only understand what their goals are, but to help them achieve those goals. And so many people think about trusts as an option. And there are many different stripes and sizes associated with trusts. I mean, there are as many trusts out there as there are individuals. There could be, because it simply allows people to pass their assets through a separate entity. So your assets are placed in a trust, and there's a trustee that then administers that trust for your beneficiaries.
And a lot of that planning can help avoid taxes down the road. It could
That's
help
right.
them, know what the plans are, help them be able to access money when they want to access it.
Right.
And
Exactly.
so that all of that team and planning ahead of time, when they're, sold their house and all of a sudden got a large influx of cash, they already sort of know what they wanted to do with it.
That's so
Or
important.
versus staying there but wanting to have a good quality of life.
Yeah, that's so true, and that's where the investment advisor's advice is so crucial, because there are irrevocable trusts that one might employ in order to avoid estate tax situations if the overall portfolio of an individual exceeds certain levels. So we may engage in that type of planning for some individuals. There are revocable trusts that you can alter and amend and change throughout the course of your life. Those might be appropriate in certain circumstances. So the dynamic between investment advisor, lawyer, and real estate agent is important, because at that point in time, we're projecting, or you are projecting essentially, what the overall value of that home is, what the potential net proceeds are.
Mm-hmm.
Financial planner is then engaging in that type of planning, and then the attorney is in fact, implementing an estate plan to help accomplish those goals, whatever they might be. So it really does take a team approach.
Lou, does some of those plans have flexibility as you get older, that they could modify or change them?
They can, yes. In a situation where you have a revocable trust, that is always amendable, I should say, modifiable, and actually you could, in essence, terminate it if you desired to. Irrevocable trusts for specific reasons are much more stringent in terms of what you can and cannot do. But you can imagine, just by using the definition of the word irrevocable, those trusts are not modifiable under most circumstances. There are exceptions to that, but it's a little complicated for what
So
we're
that's
talking about
something
here
where you
tonight.
really know what you want to do, and it's likely not to change in your particular situation.
That's right. And there could be specific reasons for placing assets in an irrevocable trust. For instance, if someone wanted to shelter some of their assets for Medicaid purposes, that might be an option available and advisable for that individual. But again, these types of situations are unique to the individual or individuals, and so there's certainly no cookie-cutter plan or remedy for any one individual. It's important to take a holistic approach to their plan and determine what's best for them. And sometimes that might be a combination of revocable trusts, irrevocable trusts, or in some situations, no need for a trust at all. Very basic plans, depending on the person's desires and what their overall objective is. So that's essentially estate planning 101 in a nutshell.
To qualify us as attorneys now?
No. No.
I think it's also important, though, in looking at, their overall picture, is life expectancy. We're all living longer, so you could essentially be in retirement for just as long as you've worked.
Mm-hmm.
And so how does that play out with the longevity.
I certainly
factor.
plan on that. So.
Yes.
There you go.
I
There you
think
go.
we all do.
And then and inflation, and how does that play a role? Cost of living is going up, and so you have to look at the different buckets that people get their income from in retirement, and it's Social Security, maybe as a pension, maybe you're drawing off of a retirement plan, IRA.
Sure.
And so now these proceeds fitting into that picture, how long, given your current income situation with inflation, will that last?
Mm-hmm.
And maybe you're in a surplus, maybe you're in a shortfall, and how can you amend, your expenses, or
Sure.
maybe give proceeds to Lou for a trust.
Yeah. Yeah.
Yeah.
Well, I think we've talked about a situation where your clients are selling, and there's going to be an influx of income.
Yes.
But there are circumstances where, for whatever reason, they may call you, Christine, and then they might decide not to sell at all. They might decide
Absolutely.
to stay in place.
Absolutely.
So
Absolutely.
there are different options available for those types of individuals as well in those situations.
There certainly are.
Yeah.
There certainly are. And when we come back, we'll actually talk to Chris about some of those financing options.
Great.
Yes. Welcome back. As I mentioned in the beginning, seniors are tending to spend more time living longer in their homes right now. And as a result, sometimes modifications need to be made, whether it be safety or for comfort. And people will come and they'll ask, does that affect the value of my home if I make these type of changes that are going to allow me to live longer in my home? And my answer to that is usually, if you do a design, if you work with somebody who is used to making those changes that allow seniors to live longer in their homes, kind of called a universal design, then no, absolutely not. It will not affect the value, and it shouldn't affect the value of your home. In fact, in some ways, it may even increase the value. And what I mean by that is, say for instance, you needed to expand the entryway of your home for wheelchair access or a walker of some sort. And then later on, you sell your home. Well, perhaps you sell it to a young family, a mother who has a stroller that needs to get easily in and out of the house. So situations like that can actually help benefit a home and add value to a home. If you're looking at a bathroom situation and you want to make sure that that's safe for you now, the grab bars that might be in the bathroom could easily be turned into towel racks later on. Lighting is so important, and as we age, I think we all need different types of lighting and whatnot for safety. And when you think about accent lighting and transition lighting, again, added value to a home. So no, I think if you are a senior and you plan on staying in your home, first and foremost, you need to be safe, you need to be comfortable, and if you work with the right people, I think you're going to be absolutely fine when it comes to the value of your home. Chris, if you maybe want to talk a little bit about the financing piece,
Sure.
when it comes to options.
I still can't get over that 2/3 of Americans don't have a mortgage, so
I
I have my work cut out for me, I guess.
you do, you
Just
absolutely do.
increased your target pool of
Absolutely.
potential mortgagees.
When it talks to people who are, approaching retirement or beyond retirement and trying to make some of the decisions that we started to talk about tonight, it's important to know that mortgage lenders are blind to age. That's the first thing. It doesn't matter whether you're 80 years old or 50 years old or 40. We don't really care how old you are when it comes to getting a mortgage. You can be 80 years old and get a 30-year fixed rate mortgage. So you're protected under federal laws that way, and it really has no bearing on it. So if that's the way you want to go in a refinance situation or a purchase situation and you want to get a long-term fixed rate mortgage, that's available to you, as well as the full spectrum of mortgage products, whether they're fixed rate products, adjustable rate products. Terms go from anywhere from 5 years to 30 years. And now, one of the new things in mortgages, you can set the term in an odd number of years. If you want the mortgage paid off in 13 years, most lenders now have the ability to do that.
That's interesting.
I
I didn't realize
hadn't
that.
heard
That's-
that.
It's kind of a new thing that's come up in the last few years, and it is nice.
That's
So
great.
gives a little bit of flexibility. If you have a specific thing that's going to happen or an event in your life that's, at
Within
that
a certain
point you're
period
going
of
to be
time.
moving or you're going to be changing, you can set the mortgage so it'll pay off, or you'll know about what the balance is at that particular time.
I like that.
So that's important for seniors to know. It's also, there's, many times people who, again, have had a mortgage for a while, it's a good time to look at your interest rate. You may have gotten your mortgage 10 years ago. Your interest rate may be 5, 6, 7%. Interest rates now are in the 4s and 3s for most products. So there's an opportunity there to refinance with many programs offer no closing costs, and they just get a lower payment that can also help cash flow and also allow more of your income to be investable if you're trying to meet some financial goals. With Chris here down the line, $100 here or there can really help that income stream later in life as you're planning. So, you want to take a look at that. Make sure that your mortgage is, sort of what you wanted to accomplish now, even if you're still living in the house or plan on staying there. There's also, let's say you have a mortgage that's a good low interest rate. Maybe you refinanced in the last couple of years, got a low rate, and you want to keep that mortgage. There's also second mortgages or home equity loans. Many times people who are facing retirement or in retirement years, they will do that because of the flexibility of it. Most home equity loans allow you to draw on the equity of your house when you need it. If you don't need it, you don't pay for it. As you pay back an equity credit line, it's available in credit again. Many of these are 20, 25 years in length, and either have the first 10 or 15 years can be interest only. So there's a lot of flexibility on that. And again, the interest rates in those are very low. They're tied to prime, and in many cases, they're in the 2s and 3s right now. So a good product to keep in mind.
Are those also as flexible as the traditional loans, wherein you can set an odd number of years in terms of repayment, or are the equity loans typically fixed at 10, 20?
The typical home equity loans, you can do that on your own.
Right.
Because of the fact that you set the payment.
Sure.
Many of them, for example, let's say it's a 25-year term loan. The first 15 years of a home equity loan may be interest only.
Right.
So let's say you draw $20,000 on it. Your payment might be very low. You may be at $80 a month, $60 a month. That would cover the interest that's due on that loan. You can pay as much as you want above that. You can take, go online and run an amortization schedule. If you have a certain balance, you say, I'd like it to be paid off in 8 years. Kind of figure out how much you can pay in. Most mortgage professionals or financial planners can help provide you with amortization schedules so that you'll know how much to pay. The only thing that you sort of don't know with those is the interest rate at times could change.
Sure.
There's no fixed rate home equity loans that I'm aware of. There's second mortgage loans that you can get for a fixed period of time, and that's separate. The home equity loan is another product like that that's available. And again, that's just one of the many financial vehicles that are available to people who are trying to make some of the decisions whether they're going to stay in the house or move and sell, to make it a little more affordable and be able to make the additions or make the renovations that they need. I know that there's many times I wish I had an elevator in my house to get up to the second floor. So whether it would add value or not, I don't know. But it's true though. As you face those decisions, and your home is your home. And many times, like you mentioned, you've raised your children there. It's the family compound, and you want to hang on to it for a while. And,
Absolutely.
and by having a good team together, you should be able to stay there if you want to, and face, selling it when the time comes. And when you do sell it, you've done some planning. You kind of know what's going to happen and what you can expect. Another popular program for people who are over the age of 62 is a reverse mortgage. They're getting more and more popular. Really, it is exactly what it says. It's a reverse mortgage. Instead of you making a payment each month, you're drawing on the equity in your house so that you don't have to make a payment anymore. Many times you get a lump sum of cash, and then the equity in the house kind of funds the mortgage as time goes by, so you don't have to make a mortgage payment. Really does help improve the quality of life when you get into the age of maybe your income's a little more fixed. And again, it's one of those options for people who want to stay in their house, but again, would really not like to make a mortgage payment anymore, and they can meet financial goals. It's a very safe product. It's very regulated by the government. There's some, you do have to go through some time spent to understand the product. They really want to make sure that you know what you're signing, what you're getting yourself into. But I recommend them in some cases.
Sure.
It's the perfect product for some people.
There is a very specific element of our society, I think, where reverse mortgages can work very well. I think, unfortunately, there's an even larger segment of our society that look to reverse mortgages a little too quickly as a panacea to solve their problems, and it's really something that should be, as you mentioned, looked at very carefully before entering into, because there are certain dangers, obviously, to anyone receiving a lump sum of money. Oftentimes, you could imagine the situation where an elder receives a lump sum and they go through it quickly, and then they're left with no additional equity to draw from. Now they're still faced with those monthly expenses, and they don't have the equity in the home with which to help pay those expenses. Now they're forced to transition out of their home, and it kind of defeats the purpose. I know that there's exceptions to the rule in every instance, and those instances might be few and far between, but nevertheless, it is important. I know that you stressed, you mentioned the counseling aspect of it, and I think that's very important. And
It is, yeah. And a reverse mortgage isn't for somebody who's comfortable making their mortgage payment, who's comfortable enough that they have the wherewithal to continue on. But if it would make a big financial difference in their life not to have a mortgage payment anymore, their income now is fixed, and and they've been in their house for a while, and they built up some equity, and they want to kind of let that equity allow them to have a better quality of life. But again, it's certainly not for those who can afford a mortgage comfortably and and can continue to build equity, or those people maybe want to refinance or keep the mortgage that they have, and and again do other things with their money to meet other financial goals as they come along. But it's just another tool that some people in facing retirement or in your retirement years, it's good to know that it's there, because we may know somebody that may need it. It may not apply to us personally or to someone that we know, but we may come upon somebody that does have it. And it's a good financial vehicle. So it's important to know that all of those products are available to people regardless of age.
Now, I know we're talking about lump sum. Is it possible in a reverse mortgage to do almost like a monthly income?
Absolutely.
A stipend type
You
of?
can set it up.
Okay.
There's a lot of flexibility. Initially it's based upon your life expectancy and things like that, but it's very flexible in the way that you receive money. And the people that, loan officers like myself that give reverse mortgages, most of them, that's all that they do. They're certified to do that. They have to go to special training. I personally don't do reverse mortgages. I refer them to someone that does. That's all they do. Many of them need legal advice at that point, because they want to make sure that there's an attorney involved in the advice that's given to the person that's getting a reverse mortgage. Again, very, very much a handheld product from beginning to end, that people really want to understand how it works, that well before they're going to get to a position where they're signing anything. They're going to clearly know what it is and clearly be sure. And most of the loan officers out there that I know that do those, that's exactly how they feel about it. They'll walk away from somebody well before they kind of push that type of a product on somebody, especially in that age group.
And I don't want it to seem like I'm not in favor of reverse mortgages, because there is a definite place for those types of products, and it's tremendously helpful for a lot of people. One of the things you touched upon in terms of obtaining legal advice, when you're receiving an income stream like that, you have to also consider that if you're in a situation where you could be considering potentially transitioning into a nursing home at some point in time, that income stream is going to be countable on a monthly basis. And so you have to be prepared to know that if you've otherwise established an estate plan whereby you have planned for Medicaid purposes to not have any assets available for use by a nursing home, when you create that income stream is going to be used to pay for your care. And that's okay. I mean, certainly in a lot of ways that's preferred. But again, raises the issue that a global approach to these situations is warranted, because you have a lot of moving pieces,
Right.
and for a lot of people, I think for far too many people, they don't take advantage of that type of global or holistic approach where they should kind of segment or compartmentalize their planning and what they're doing, rather than having open and fluid communication amongst all parties to develop a right plan for you.
Many
Or for them.
people going through the reverse mortgage process, because of the counseling part of it and the other things of it, do get their affairs in order going through it, because it's
Right.
sort of those issues that you talked about, Lou, are touched upon
Yeah.
even during the application process.
Sure.
And it, again, it is a product for a unique group of people. It's not for everybody.
Right.
It's nice to know that it's out there, and for all of us to know when you do pass away and you're at that point of life where, it's nice to know that also on a reverse mortgage, your family still can have access to the home. That's one of the biggest questions. What happens when I die?
Absolutely.
Sure.
What could happen to my house? The family has the first right at that home, even in that situation, before anything else happens. You, as a relative or family member, immediate family members, first off, have the right to take that property back and do what they want with it. Sell it, keep it,
Right.
refinance, pay off the mortgage that balance at that point. So
Do they buy it from the bank?
they
at
buy it from
current
the
market
bank.
price?
They, at 95% of the appraised value or the full mortgage amount, whichever's less.
Wow.
So, that's all they need to do
Yeah.
to take ownership. And they have time. It's not, the banks are understanding that you do have a period of time to
Yeah.
make the decision as a family.
I think it's,
But eventually, if you don't want the house, what's nice about it is the bank then will take over that, and they
Right.
will handle selling the property if the family doesn't want it, or, for whatever reason.
I think it's about 6 months after the date of death of the note, the person who's obligated on the promissory note. But my point is that if it's a married couple that's living in the home, you'd want to have both the individuals on the promissory note and mortgage, because if one only is on the note and mortgage, and that is the spouse who dies first, that triggers the repayment.
Right.
And so
It's the
you know,
last surviving person on the
right.
note.
So
That's
you want
correct,
to have both.
And so it's nice though, because all of those people are covered.
Right.
And, so again, reverse mortgages are one part of all of the mortgage products that are available to people in that stage of life, and how it would fit in if they decide to stay in their house or they want to do modifications and want to continue to be there for as long as they're comfortably doing that, and that's part of their financial goals.
Yeah, that's great.
Great. All right. And we will continue our discussion when we come back. Hi, and welcome back. Now we're going to hear more from Chris regarding the financial planning when it comes to
Financial
seniors
planning.
and their income.
Well, thank you. Part of my process with clients is to look at, where are we today and where do we want to go? And a lot of times people ask me, how much do I need to live on in retirement, and how much can I withdraw? Those are the two big components. And studies have shown that people want 75% of their current income to live on in retirement. Now, that number, could be jaded, but it really just depends on your lifestyle. Are you going to be traveling? You're going to be golfing? You're going to be eating? What types of activities are you going to be doing in retirement? So I think it's important to factor in those expenses. As far as
Sorry to interrupt, but do you actually talk about what their lifestyle is currently, in terms of what they like to do, as you said, travel, golf, etc.
yeah,
So you
Country-
actually say, how do you envision
Yeah,
yourself after
country
retirement?
country club living and so forth, and then from there, you take a snapshot of their current asset pool.
yep,
You might project what their asset pool might be in 6 months or a
Exactly.
year from now if they're looking to sell, and then based on that, you develop a strategy to create the income stream to satisfy their lifestyle?
Exactly.
Okay.
If it's possible.
If it's
You know, you got to be
right.
realistic.
Sure.
So what I'll do is look at their current portfolio,
Mm-hmm.
look at future income streams from Social Security, from a pension plan,
Mm-hmm.
you know, structured settlements I've seen in
Sure.
some cases that start up 5-10 years down the road.
Mm-hmm.
So all these different streams of coming in, you know, play a factor.
Right.
And then your expenses. But more importantly with expenses is the inflation aspect of things.
Right.
So
Sure.
you might need $100,000 today to live on, but by the time you retire, that could be $200,000.
Mm-hmm.
So those are things that, you know, that I look at. As far as the withdrawal rate goes, you know, the younger you are, the less you can take out. I mean, generally 4% is a safe
Uh-huh.
number, but then you have to look at their risk tolerance and how their portfolio is structured, asset allocation wise.
Yeah.
You can't be too conservative, but you can't be too aggressive. So these are things that we look at.
Sure.
But I've seen the withdrawal rate really goes anywhere from 4% up to 8% for those folks that are in their, you know, later years.
Right. And you'd think
So-
that, you know, as I think about retirement, hopefully someday, those are the years where your expenses, you know, one might think your expenses decrease in your retirement years, but really they could also increase for those people that want to take advantage of those retirement years by traveling and doing all of the things that they perhaps denied themselves during their working years.
Right.
And so that becomes a problem for a lot of people, because then they're increasing the rate of withdrawal from their portfolio necessarily to enjoy their portfolio.
Yeah, and a lot of times, you know, they might be selling a home, coming into some proceeds, but then turning around and maybe taking some of it and buying a condo.
Mm-hmm.
And in theory, you know, yeah, they might be paying less in taxes, but now they have a condo fee to add into that equation.
Okay.
So there are other things that, you know,
To their expenses.
their
Just by
expenses.
selling their home it may not necessarily reduce the amount of their monthly
it
expenses.
may not.
And one
Okay.
thing too is from a financial point of view, several of the investment incomes we can use to help qualify people. Many times people own their first home at retirement.
Mm-hmm.
They couldn't afford a house maybe, but now they can. So it's important for them to know that some of the investment streams that they have, we can use those, the interest and dividend income to help qualify them. It doesn't necessarily have to be W-2 earnings.
Right.
When that ends, there's other sources of income that we can use to help them qualify for mortgage if they're looking to
And
at that age.
You bring up a great point, because a lot of times when I sit down, you know, with clients and prospective clients, and we're doing the financial planning process and the mortgage component comes up, I'm always shocked to see a lot of times people still paying those 5-6% rates. And I'll
Right.
say, why didn't you refinance? Oh, I didn't think I could. I didn't think I'd qualify. There's a lot going on in the media with, you know, the news kind of fills their head that maybe I can't,
Sure.
I don't have the income.
Mm-hmm.
So that's a good point, because, you know, they should at least look into it. Maybe they could refinance and cut that rate in half, or
Right? And again, that
And that's
savings can help them meet their financial goals.
I was
I
gonna
mean,
say,
many
that's-
times
that's-
working together with a team of
as
people.
they say, that's found
Right.
money. Right?
Yeah.
That's
It is, and that may be the extra 100 that they can put aside now that they may need to draw upon in an investment vehicle later on in life.
Right.
You know? So,
Yeah.
you know, all of those tools are important. I think it's that team approach that we talked about. You know, it's nice to have a financial plan, have a mortgage person, real
Yeah,
estate agent,
they're all
and an attorney.
talking
So,
together.
right. Good.
Absolutely. You know, I do find it interesting because when I think about 75% of income now, so if I think about that myself, and I think about what I pay on a, you know, monthly basis, my mortgage and my whatnot, and then I think about my kids, and I think about all the money that I, you know, kind of put toward them, you know, and all of that I won't have in retirement.
You hope.
I hope.
Right.
You know, whether it's schooling or sports or just anything. Yeah, I think about, and it's interesting to listen because I think that I can live much more conservative, I guess, when I retire, but maybe that's not necessarily.
will you?
But will I? Exactly.
I mean, what's the trip to Italy cost? Or,
Yeah.
you know,
Sure.
So now I can splurge on myself a little bit more.
exactly.
And, yeah.
You know, maybe your kids move out of state, and now
Now I have to travel
You have to
see.
travel.
Yes.
Sure.
my assistant's actually leaving to go see her new granddaughter this weekend,
Yeah.
in South Carolina.
Mhm.
And so, those are expenses
Yep.
that you gotta
Take into consideration. Absolutely.
That's why she's still working.
And you know, college education too is a big expense that comes up maybe earlier in life then, but you know, it's all part of the the planning process. Many times, maybe when you're looking at retirement, you maybe want to help a grandchild get through college
Yep.
at that point. That may be an important goal to you. You want
Yeah.
to give back to your family, and again, you could help with advice on that.
And projecting out that income plan, maybe there's a pretty good surplus there.
Mm-hmm.
And so they can, you know, talk to their estate planning attorney and their tax advisor to figure out, you know, how much can I gift to
Sure.
my grandkids.
Yeah.
And
That kind of brings us almost full circle to where we were in the beginning of the show in terms of planning and your estate planning options and what your ultimate goals are. Certainly to the extent that you have assets that are in excess of what you may need, what you feel you may need moving forward in consultation with your financial planner. If you have a certain amount of assets that you can actually segregate and remove from your overall estate, that helps to save on estate taxes and potential nursing home costs if it's done within a 5-year period at this point. But if it's done properly and meets the current regulations, you have the ability to shelter those assets from reach for either taxation or nursing home costs. So, yeah, it's an excellent point.
Yeah.
Great.
And the other thing to consider too is when you do retire, as your sequence of returns in those beginning stages. You know, for those who retired in 2008 and saw a 30 to 40% decrease in their portfolio, that's a pretty significant impact. And
Huge, yeah.
some of those people might have had to go back to work or modify, some of their expenses and whatnot.
Mm-hmm.
So, we do offer some solutions that give you guaranteed income streams, through investments. So, those are other things, options to look at that I think is important that might make up a nice piece of your overall portfolio.
Yeah.
But,
Great.
We got to get all the seniors in, people who are retiring, and have them talk with you.
That's right.
502 Main Street, Melrose.
There you go. Nice plug.
Exactly. All right, when we come back, we'll be speaking with Joy Camp from C&Z Transitions.
And now let's welcome Joy Camp from C&Z Transitions. Joy is a Melrose resident. She is a certified relocation and transition specialist, also a member of the National Association of Senior Move Managers. She has 25 years experience in the health and human services industry.
So Joy, welcome. Thank you so much for being with us today. When I heard you speak at the Women's Council of Realtors last week, I got so excited about your service. I thought it would just be a wonderful benefit to the show that we were doing today. So thank you for
Thank you for
agreeing to
having
come
me.
on. I feel, and please correct me if I'm wrong, I feel that the senior move management industry might be a relatively new industry, although I feel like I've been hearing more and more about it recently. Is that true?
It's
or-
true.
Okay.
It is true. The National Association of Senior Move Managers was founded in 2004, so it's relatively new,
It
about
is.
10 years.
Okay.
And there are over 700 members in the National Association across the country, and there are 27 senior move management companies located in Massachusetts, and another 4 that also serve Massachusetts.
Wow, okay. Now, your background was actually health and human services, and you were there for about 25 years? Is that?
That's true.
That's true, okay. Now, did you find that it was kind of a natural transition for you to move into this industry?
Yes,
Okay.
yes. Actually, we say in our business that we're part manager, part planner, part organizer, problem solver extraordinaire, and part social worker. So it was an easy transfer.
Okay.
And my business partner, Natalie Zerba, and I founded C&Z in 2008. So we've been in business, this is our 7th year.
That's
and we founded it after we went through the experience of taking care of our parents' difficult home transitions, going from the big home to the smaller home and then to a senior community. And we went through all of those transitions and there wasn't a lot of help. So then we ended up helping our in-laws, we ended up helping our friends, and we were still working at the time. But we thought, wow, this is, there's a need for this. And we thought this is something we would love to do. We had been promoted to be managers and weren't working directly with people anymore. We wanted to get back, and seniors was an area we loved. So we started it. We found out then, we thought we had no idea. Then we found out there was the National Association of Senior Move Managers, because we were founded in 2008, as I said. And then we went and got certified because, our bid was to get as much training in this area as we could.
Absolutely.
So it was a natural for us.
Okay, wonderful. Can you tell me a little bit about the services that a company like yours would offer?
We have a menu of services, and I'll speak for not just my company, but for senior move managers in general,
Sure.
Although I can't speak for all of us because we tailor it, but we generally have a menu of services that our clients can choose from. So we customize each job, as we say,
Okay.
to meet the needs of the clients. And our most popular services are hands-on assistance with downsizing,
Okay.
and that's the process which we help someone go through all of the possessions that they own and make a decision about whether it's going to be, they're going to keep it and move it to their new home, whether they're going to try to sell it, which is very difficult these days, trying to sell anything because there's a glut on the market with all the seniors letting go of their things. Whether they're going to give it to family or friends, whether they're going to donate it, or whether it needs to be discarded. So we help with all that. Then when those decisions are made, what we do is execute the decisions.
Okay.
So we get the donation pickups arranged for. We organize shipping gifts if we need to, or family mementos. Just this week, I shipped 2 big boxes to California, UPS, well, family albums for a client. For an adult daughter who lives in California, her mother lives here
Okay.
in Cambridge,
Very
and we're
nice.
doing the move. So we make those kinds of arrangements. And then we have these very specialized move services, which we take care of all the details. It's like having a wedding planner for a move. We organize everything from start to finish. Once we've downsized and we know what possessions, we also make the furniture floor plan.
Oh,
So
nice.
once we know where they're going to go,
Okay.
we figure out and make a furniture floor plan on a magnetic floor planning board that our clients can see the options they have for furniture.
Oh,
so we
nice.
make sure it is. So we make sure we're not moving something that can't fit.
They can't, okay.
Okay, that's very helpful. And then we make all the arrangements, even including contacting where they're moving to make sure we reserve the elevator for the movers on movers
Very
on
last
the move
detail.
day.
Okay.
Every last detail. And a move day, this is my favorite. A move day, after the movers leave, we unpack all the boxes. I have a whole crew. We unpack all the boxes. We set up the kitchen. Everything is, in its place. We set up the bathrooms, the living room,
Oh, nice.
the bedroom, plug in the lamps. When our clients walk in at 5 o'clock, it's home. All the boxes are gone. The bed has got fresh sheets. They're ready for their first night. So, and
Amazing
then
service.
we will empty the house
Okay.
for its closing, if that's
Okay.
what's needed to be done.
Okay.
And we also, in this process, do a lot of things like shop for things that are needed. This
Okay.
weekend, one of my staff is taking one of our clients to shop for a mattress and a new bed because their king-size bed is not going
It's
to
not gonna fit.
Not going to fit in this new home.
That's wonderful. Okay. Really, really full service.
Full service, yes.
Okay, nice. Excuse me. I know as a realtor, and when I'm speaking with sellers, decluttering or downsizing
Mhm.
is probably one of the hardest things for people to do. How do you work with people to actually have them let go?
Yeah, letting go is hard. Letting go is hard. And we do 2 things right from the start in terms of letting go. First is to acknowledge with our clients that leaving their long-term family homes and also letting go of possessions they love and they still love is hard, and there's a sense of loss and a sense of grief. But part of our job, we see very clearly, is to help them with this process. So we also need to know from the start, that second piece, learn what possessions are most important to them. You know, what do they cherish the most? And if they can't take all of these possessions, then we talk to them about how they can preserve memories of these possessions.
Okay.
One of the things that we do frequently is recommend, if they're leaving a long-term home, let's take a picture of every room in the house and make a memory book of this
I
house.
loved that idea. Yes.
So we do a lot of that.
Okay.
We also recommend, if they have special collections or anything that's very sentimental, that we take pictures of that, or in some cases frame it. China. Women really don't want to get rid of their china, their grandmother's china.
The
you know,
memories, yes.
The memories, you know, of the family dinners. And their children, our seniors' adult children, already have their china, and the grandchildren don't want it because they can't put it in the dishwasher.
Absolutely.
So we recommend, you know, let's frame one of the dinner plates and put it in a shadow box and hang it in your new home where you can have all these memories. And we have found that the baby boomers that we're doing a lot more work with, the older baby boomers, are framing a lot of their t-shirts from the 60s and putting one on the wall.
That's great.
And then we find our empty nesters
Yes.
who whose children are off in college or even getting more settled,
Yes.
have been in sports and various activities,
Yes.
whatever it was. They're making, a lot of them are making quilts out of the t-shirts when their children played sports.
I love that idea.
Yeah, or making special wall collages of
Okay.
things like from scouts and that kind of activity. So,
Oh.
you know, we really want to focus on helping with the memories. And then for our clients who just simply can't let go of their clothes and things like that, and they need a little extra help visualizing, we take blue painter's tape
Okay.
and we put it across, we measure the size of the closets they're going to have in their new home, and then we put the exact same amount of blue painter's tape across
Okay.
their closet, and they can see they can have whatever they want, but
Within that
it has to fit in
boundary.
that space. So it helps give
Nice
a visual.
idea.
Yeah,
Okay.
because it's hard to visualize when you're not there how much you have to have done.
Absolutely.
So those are many of our ways.
Okay, wonderful. What do you see as far as a benefit to using a senior move management company?
There are numerous benefits to using a senior move management company. One of the main ones is we do this all the time.
Yes.
And so we have
Yes.
the resources and we have systematic approaches of how we do things
Okay.
so that we can do it more quickly.
Okay.
And it also is a cost benefit in a way that lots of seniors in moving take far too many things in their families because they get into struggles about what to take. So we've been called into senior communities to help downsize the senior in their smaller home because it's just loaded with boxes and furniture.
Oh, so once they're already there.
Once already there.
Oh, okay. Okay.
Yeah, yeah. And so we, you know, our service
We'll avoid
prevents
that.
Right, we avoid that because we do the furniture floor plan. We figure
Okay.
out what's, you know, what can fit and what can't fit.
Okay.
So that's a cost savings right there, rather than you know
Absolutely.
hiring movers to come in again and us. And then there's this enormous peace of mind to both the seniors that we're working with as well as their adult children. For the adult children, it's a relief to them that they don't have to take their vacation time.
Yes.
They don't have to struggle with balancing family and work and do this exhausting work. And that they can spend this time instead, as we recommend to them, focusing on doing fun things with their parents. You know, really enjoying their parents. Quality time rather than engaging in a struggle with them over what they can keep. Because the seniors often consider their children saying, "Oh, Mom, you don't need this," or
Yes.
"Dad, you don't need this," as a criticism.
Yes.
And so they get in these tugs of war. But when they hear it from us, we're the objective outsider, so you know it helps
bit more
maintain.
open.
Yeah,
Yes.
it helps maintain
Yes.
family relationships, as we say.
Okay.
And for the senior, they're relieved that they don't have to ask their children for help and to
Sure.
impose on them.
Sure.
And they like working with somebody that you know comes in and really brings a new perspective and
new energy.
A new energy,
Yes.
and we do have fun in this process.
Great. If a family or a senior is now considering hiring this type of management company, What would be some interview questions maybe that somebody should ask? What information would they need to find out?
Good question. It's a good question. And I'd also recommend to our viewers that they look up the National Association of Senior Move Managers. Google it, and you'll get their website, because they have all of these questions, and maybe more if I forget some. So first, how long has a senior move manager been in business? And not only how many years they've been in business, but how much experience they have. What kind of jobs have they been doing? And then have they got any specialized training? For example, I'm a certified relocation and transition specialist, so there are specialized training folks can get. And then what are their staff? Are they really employees, either full-time or part-time, or is the senior move management company hiring subcontractors to do the work? It's important to know who's in your home.
That would make a difference.
Yeah, that would make a difference.
Okay.
And related to that, does the senior move management company have full liability coverage as well as workman's comp?
Okay.
Workman's comp and the full liability protect both the senior move management company and our clients, so that's important. And do they have a contract? Do they use a contract? National Association of Senior Move Managers requires us. How do they charge for their services? And are they members of the National Association of Senior Move Managers? And of course, do they have references?
Absolutely. Okay. All right, good. If there was one piece of advice that you could give people watching the show at this point, what would it be?
Start now.
Okay.
I tell people
Planning and
this all the
preparation.
time. I do a lot of presentations on downsizing and cluttering, and I say to folks, even if you're 55, even if you're 50, you're not planning to move for 10 years, start now. Get ahead up on where you're in control. And for the folks that I'm meeting that are in their 70s and their 80s, and they're saying, I think I have 2 more years, I got some time. I say, no, start now. Start now while you're in control. You never know when something's going to occur, whether you're going to get ill, your spouse is going to get ill, you'll be in an accident, and then you don't have any time. All of a sudden, it's a crisis and an emergency. So start now while it's not a crisis, and you maintain control.
Wonderful. Joy, thank you again so much.
Thank you so
This
much
has
for
been
having me.
wonderful. Absolutely, absolutely.
And this concludes our show for today. Thank you for joining us again for the Faces of Melrose Real Estate. You can check out our Facebook page and leave any comments or suggestions for anything you'd like us to discuss in future episodes. The artwork was again provided by the students from Follow Your Art, which is located here in Melrose Square. Our next episode will feature green living, and you can please tune us in on Thursday nights at 8 o'clock, Saturday nights at 7 o'clock, and Wednesday mornings at 11 o'clock. Thank you.